Friday.
Welcome to the Texas Oil and Gas Podcast, the show dedicated to bring you the news from the oil patch deep in the heart.
We're back with the Texas Oil and Gas Podcast.
Is the music playing?
It cut off halfway.
Oh, okay. Well, thanks for tuning in, folks. The music was playing. Sorry, it cut off. Go ahead, Josh.
So we are at episode number 200 for the Texas Oil and Gas Podcast. We appreciate you guys tuning in today. I'm your host, Josh Shelton, friend and co-host Ryan Ray. All right, so episode 200. We got
2 more 5-star reviews.
We did. I saw that. I think 2 reviews as well.
Yes, we're up 309 5 stars, and we have this is from 824683175543. I don't know if that's a cell phone number or if that's just a weird username. Appreciate you guys. Well, we appreciate you, long number person. So thank you. And then Oil Patch Warrior. I love the show and how well y'all explain your opinions. You guys have amazing guests that are very knowledgeable about our industry and others that affect the industry. Thank you for all your hard work and honesty. Well, there's one thing that's honest.
What was his subject line, Ryan?
We're back in it.
We're back in it. I think so. Good news. People out in the oil patch. So I was happy to see that. All right. So Ryan, what are we doing? Are you grilling ribeyes today, or what are we doing for episode 200? Single malt scotch.
Bringing on a prior guest, Reed Goodman, and so it's appropriate to have someone who disdains me so much to come on the show to humble us for after 200 episodes.
That's better than a steak. That's better than a steak.
Well, we're humble guys on this podcast. We're very humble, and so it's 200, man. It's golly, it's what's obviously halfway to 400. But it's just that's a lot of shows.
Yeah, man. Yeah, I think that's 4 years essentially. 4 years.
4 years. Well, we did our 4-year anniversary back in Texas Independence Day, so there we go. It's I mean, just think about all the stuff that's happened in the last 4 years with the market, oil and gas. I mean, it's insane. Like, it's literally insane. And
it is.
I mean, I don't know if I can handle another 4 years like the last 4 years.
Yeah, I mean,
mainly last year, but
yeah. I mean, oil hit negative 40 essentially. We had an oil and gas war with the Saudis and Russians that like to have killed all of us. COVID, which like to have killed none of us, but is bankrupting the.
Yeah, I wasn't talking about the last 10 years, which was last year.
Yeah.
That's like a decade. That was like a decade in itself. That was crazy, man. It's crazy. But yeah, I mean, Josh and I were hanging out on Saturday and we were just talking about some of the stuff that happened last year. And it's so crazy because it feels like that was 3, 4, 5, 6 years ago, because you didn't even think about it anymore. It was so much. I'm looking forward to the book to be written about just the different shutdowns and different measures that were taken, because it's really hard to track just what all. I mean, you talk about the price war. We killed Soleimani last year. I mean, no one even talks about that anymore. The Iranians shot down a jetliner, a commercial jetliner. That happened last year. I mean, no one even talks about it. They shot down a passenger jetliner last year. And no one talks about it. So it's been going on for 4 years, but it feels like last year I was like a decade long, and so it's been crazy. It's been crazy for sure.
Yep, it has been. So just jumping into some stories this week. David Blackman.
Yeah, I tell you what, listen, I see Reed there in the background. Let's bring him on if he's ready. Are you ready, Reed? Looks like you're ready. I see you moving around. Yeah, he's smiling. Let's bring him on here.
Reed, what's up, buddy?
Let's see here. Put him on the big show.
Guys.
Look at that.
Doing good, man. Where you at in the world?
Can y'all hear me? I didn't know if I needed to dig some earbuds out. Looks like y'all all have them in. But if you can hear me fine, go ahead and nod.
Yeah, I think you're okay right now.
Yeah,
okay.
Sorry.
Okay.
We were saying before you got on, we thought for episode 200 that would be good to get on someone to humble us, and so no better than you who hates me. So it works out well.
Well, Ryan, I'm trying something new. Josh will appreciate this, but you might not subscribe. I was reading a book, and it said that you be quick to listen, slow to speak, and slow to anger. I can't remember what the book was. Maybe some of y'all will know it.
How to win friends and influence
anyway,
people?
It's coming back to me as the Bible. But anyways, neither here nor there.
I'm glad we did this. I'm glad this is how we did 200.
I might let y'all do most of the talking today.
Well, let's see. Israel shut down the national facility last time under Obama. That happened this morning, I guess, or yesterday. So Reed, it's been a while since you've been on, man. So maybe update everybody where you're at and what's going on with you.
Yeah, Ryan. So last time we talked, I was living out in the Permian with a smaller private equity company out there, and everything crashed in March. I was let go from that group, and a lot of things changed. So we ended up selling our house in Midland, moving home, and building a house. And I was a little sour on oil field, and the way some of those things ended, and I think a lot of people were last year around that time. And so I did what any reasonable red-blooded American would do. I moved back to the homestead and started my own company. And told the man to go suck a turtle shell, and we've been grinding away ever since. So
started your own company, man, living the dream.
Yes, but 4 of them.
4 of them.
We're 4 companies deep now, so I'm gonna have to slow down at some point.
Hey, Josh, it must be nice to be able to afford a truck with them fancy sunroofs like Reed's got, huh?
You got vegan leather seats in there, Reed?
Hey, I'm praying that the transmission holds out at one of these companies and start making some money.
Oh man. Well, Reed, so tell us, you talked about moving around and stuff, and I think now you're a little bit further closer to the Eagle Ford, but you're still out of the Permian. So kind of what's your read on what's going on out there in the oil patch right now?
Man, I think there's a lot of business out in the Permian. There's still a lot going on. Some of these companies had the wherewithal, like Pioneer, like Endeavor, like EOG. They had wherewithal, they had acreage, they had kind of the forethought, I think, that when all of this hit, they might have had to shut in some wells for a little bit, but really in the overall picture, they never completely shut down operations because they knew, just being a cyclical business, that it was going to come back. So we saw a big drop in things, but we've seen a lot of continued work in the Permian. And then, here in the last 2 to 3 months, our company, as well as several competitors that I'm, great friends with from the years we've spent together, have told me that they're having record months. And last month, March was the best month we've had in the Eagle Ford and in the Permian. And so I think a lot of people are getting comfortable with $60 oil, and they're hoping, that if they can stay in that 55 to 65 range, there's a lot of room to run and change. And I've had a lot of conversations with young engineers in the last 6 months that are trying to figure out how to go from, the companies in general are trying to figure out how to go from a D&C company to an operating company. And these guys, they're really putting a lot of focus on lowering LOEs, better artificial lift, late life, plans for these wells that they've already drilled, for this great acreage that they've already drilled. And so a lot of that shift is focusing away from punching holes and fracking to, how do we make these guys make money, right? You would think that would have been the target from day one. But a lot of guys are really now scratching their head and they say, hey, these need to be profitable. And so that's been good for my business in particular.
Yeah, so Reed, I saw a report that came out that a lot of jobs are actually being added right now out in the Permian. That jobs are finally starting to swing up pretty intense. Month of February, there was a huge jump in jobs. Are you seeing companies starting to hire again and starting to bring back on some people? I mean, is there hope for some folks that are out there, or do you think people are going to try to run with slimmer crews to keep those margins where they need to be?
I see on the service side a lot of hiring coming back. I've got 3 friends that we kind of had an agreement with under my company to do some work here and there as needed, and they back to work full time for somebody else, which, we hate to see them go, but we're glad that they have a salary, to feed their family and whatnot. And so, just in that personal experience, there's been a lot of pickup out there, especially in West Texas. I'm not seeing as much in the Bakken, not seeing as much in the Eagle Ford either. But every week for, I think 6 or 8 weeks now, we've seen the frac spread climb every single week, right? And so that's good. That's good in a lot of ways.
Yeah, and so you mentioned people are comfortable with the oil. One of the things that we've tried to think about and kind of get a read on is, as we see the drilling increasing here, how much fear is there, though, because the Saudis and OPEC meet monthly now. And so, if they want to go and kind of turn the faucet on, then you're going to, that could happen as soon as, I guess now they're mapped out through July. But theoretically, they could change that if they want to. It's not like before where it was 6 to 7, 8 months between meetings. And so you kind of have this constant pressure. I think that's actually been a good thing from the U.S. side because it's kind of kept us at bay. And so do you think that trend will continue, or do you think there's, we're going to do what we've done before, which is go over drill it again?
Well, it's definitely kept me at bay. So one of the 4 companies, well, 5, one of them's a holding company. 4 companies that we started.
Okay, hold on. The dude just started a company on the podcast. He had 4 companies, and in the podcast, he started a 5th. By the end of this interview, he had like 12 companies.
Hold on.
I ain't got one job offer yet.
Company, right? Come on. Hey, is the podcast still for sale before we get too far off track?
Is the podcast what?
For sale? Yes.
Yeah, everything I got for sale.
Yeah.
Everything's for sale.
I'll bring your first offer right now.
Wait, we need to get off live.
I'll give you all the change in my change tray.
Let me tell you something. That's way overvaluing this thing. Way overvaluing it.
Hey, so to get on topic, Ryan, one of the companies we started is a production company, and it's been a dream of mine and a dream of my father's to buy some production. And I found out you're close to home. It's shallow. It's easy to work. It's everything we wanted. It's probably not going to buy us a plain or vegan leather seats, but it's a lot of fun, and it definitely helps to have some income out there. And so we have 2 wells out there that were drilled and uncompleted. And I didn't know that when I bought the property, but I got out there, and started doing some research and really looking through this, and came to the conclusion that nobody ever fracked those 2 wells. And so to me, that was a huge blessing. But Dad and I are sitting back now and looking at this and saying, we'd love to frack them at $80. At $60, they still make a lot of money. We love to frack them at $80. If we can make cash flow work where we're at, why don't we wait until somebody does something dumb and oil prices shoot up, and then we'll go ahead and frack them? On the flip side of that, though, Ryan, the cost keeps going up, right? So these are, like I said, these are small, shallow wells. Let's say oil at $30 a barrel, it would cost, for a round number, $10,000 to frack one. When oil's at $60 a barrel, it now costs $20,000 to frack that well, and I fully expect when oil's at 80, 90, 100, it's going to cost me $50,000 to frack that well, right? So the services go up on it because, things are in high demand, and so I'm sure a lot of big E&Ps are battling the same things that we're thinking about here. We would like to make some extra oil, but is that resource worth more later? Weighing the NPV on it. But then also, what's the emphasis to get out later when services are hard to find, right? And do we have to bring in a lesser crew that doesn't know as much about the area, is not as good, not as efficient, and then we have more risk with our wellbore because they might not do something right. And so I guess what I'm trying to say is I don't know. I think a lot of people are still being cautious. They know that they need to move ahead, but I don't think anybody's just opened the gates and gone full bore because they know there's a lot of there's a lot of factors at play, and with them looking at cash flow, a lot of times it's easier to make cash flow what you have instead of spending a bunch of capital and may or may not pay out with current prices. So.
Well, it's interesting because this is a story that we've followed on the podcast for years now, Josh, is that, as price goes up and the service cost goes up. And so right now, a lot of service companies took a beating last year, we did. So, and they stayed open and lost money. And so they're trying to figure out how to make their money back. And so as you're talking about that, Reed, I'm sitting there thinking, well, if you're a service company, you're kind of in a tough spot because, if you want to raise your rates because you start hiring more people, your cost goes up, all this stuff. You want to get better people on the market, but then the price isn't really justifying that much higher prices. Of course, if you're the producer, you want to keep the prices down because you're trying to make sure you keep your margin there. From the service side of things, is there kind of a frustration maybe that the rates aren't able to go up fast enough because as we know what happens on the EP side last year because all these companies are public, or most of these companies are publicly traded. But on the service companies, unless you're kind of a big one, you don't really know what's happening. So a lot of these guys are privately held, and so they went through a lot of pain last year. I'm sure they're looking to make that money back. Can they make it back at $60 oil, or do they have to just play the game really slow and be patient?
I think it's going to be hard to make that money back for a lot of those companies. With my tool company, Tarpon Oil Tools, shameless plug. We've really taken a large focus and talked a lot internally that we don't want busy work. And I came from a lot of private equities where at all costs to go get the work, we want market share. And I can't speak for those companies where they're at now, but we made a decision that we didn't want busy work. We want work that's profitable, and we want strong relationships, right? And so we would rather have 10 small mom and pop accounts than one knocked out of the park, huge producer. Because we feel like that's kind of a hedge on the service side, right? We have a better relationship. They know if they call at 2 a.m., we're going to be there, whether it was at $30 or $100. And then, we charge a little bit more maybe than we would one of those really big companies using one of those private equity companies that's trying to get market share. But for that, you get a relationship, you get the same hand on location, right? And so our strategy has really been trying to get out of the busy work and say, look, we're in this to make money, and we know you are too, right? So let's come together and make this worthwhile for everybody. And so, with that being said, I've quoted some stuff out in the Permian, and a year ago, I could touch the price that people are quoting now. I couldn't have bought my equipment for the price that people are selling it for right now. And that's tough. That's really tough.
Yeah, so Reed, I mean, it's interesting. Some of these companies had the PPP money to help kind of float them along last year, and there's been some very tight margins even after that money expired. I had friends that I was talking to out there that a lot of them got laid off as soon as that PPP money ran out. I guess the question that's going to be for a lot of these companies is, with the debt that they've accumulated, will they be able to survive, or are they going to have to rebrand and remarket themselves? I'm hoping to see these companies can actually make it. I know a lot of people out there that are in that phase where they're seeing hope, seeing light, but at the same time, like you said, I mean, the margins for the producers are just so slim that they're not able to get those prices up where they really need to be.
Right. And I think a lot of, we talk a lot about the E&P companies having taken it and being slave to shareholders and whatnot, but we don't talk about it on the service company side nearly as much. That, look, Halliburton slaves its shareholders, but so is any other private equity company slave to their board of investors. Right? And so a lot of these guys lost a lot of money, and they're not wanting to put much back into it, one, but then, two, the whole idea with a private equity company, most of the time, I don't want to paint everybody with a broad stroke, but most of the time is to build this company up, to grab market share, to sell it to Baker Hughes to Halliburton to Schlumberger to one of the bigger, and get your pay out and be out and be done, right? And now we're flooded with so many service companies. If they haven't gone under yet, they're just holding on, praying and hoping that somebody buys them out.
Mm-hmm.
And so it's the exact same story that we saw with a lot of these E&P guys coming into the shale plays, and that's why we're seeing consolidation on that side.
We lost you there, Reed. I don't know.
Yeah, somebody tried to call me.
Okay.
Yeah, we're seeing the same consolidation, I think, on the service company side.
Yeah, so I think we got an article last week from David Ramsden Wood and one from David Blackman talking about companies like Pioneer that were buying up acreage and buying up companies. And their thought was smaller companies are going to have a really hard time thriving out in the Permian. But you seem to have an angle right now that there's actually a great opportunity for these smaller companies to build deeper, better relationships with their clients. Now, what do you think about the Permian and the ability for the small guys, especially with ESG that these companies and the environmental concerns as things progress? What do you think? Do you think small companies still have a place in the Permian? And you think it's going to be a long-term opportunity for success?
I think they absolutely have a place, and I think they always will. That's what's driven innovation and new ideas. We look at George Mitchell. He wasn't working for Chevron when he started all this fun fracking stuff. So I think there's definitely a place for them. And there's so much acreage, especially in the Permian, right? There is so much acreage to cover, and there's so many different ways to go about it. I know of a company out there that we're doing some work with that, more than half of the wells they drill are still verticals, and they make great money doing it. And do they have shale acreage? They have acreage that would be considered shale acreage, right? And they drill a couple of horizontals on there, but they're still chasing a lot of the conventional play out there. And so there's room for all different kinds, I think, because it is such a big basin and it is so prolific from so many different formations. So there's definitely room there, and I think there always will be, right? And there's also the idea that, when you have an office of 50 accountants and you have 7, land division order analysts, and you have 6 tiers of middle management, we talk about synergy buying up these companies, but really when you're at one of these big companies, you've got a lot of overhead to pay for. And when it's 6, 7, 8 dudes wearing 7 or 8 different hats, there's a lot more money to be made in that office, in my opinion, because it's no longer about scale, but about profitability. And those guys don't have to hire everything out or, get another engineer to look at this particular piece. They can wear a lot of those different hats. And so I think there's still a lot of room for those companies in the market, right?
So one of the things, Josh, in the ESG stuff, we've talked about that some. Curious what your thoughts are on how that might impact service companies. But there's also kind of the angle, as you see consolidation wherever it's at, and the bigger companies become, the more the higher the barrier of entry it is to work for them, right? So you're going to have different insurance requirements, different safety requirements. So I agree. There's always going to be a spot for the small guy, but will we kind of see maybe a more bifurcated Permian to where kind of the big service companies are working for the big oil and gas companies, and the small service companies are working for the small, because you can't cross that threshold because there's too many insurance requirements, there's too much paperwork involved. What are your thoughts on that?
Yeah, I think you're probably onto something in that regard. We had to up our insurance requirement 3 different times in the last 3 months because we kept, beating our head against the wall trying to get this MSA with the customer, and they wanted twice as much as the last MSA we signed as far as insurance go. And so, the cost of doing business, and you're absolutely right that does squeeze some people out. But I think a lot of that's just changing with time, right? And so, your mom and dad's oil field company from the 70s or from the 80s did not operate the way we operate right now. And so there will always be evolution in how we operate and what we focus on and what we put our effort into, right? My grandpa would tell me stories back in the 60s selling compressors that he'd drive around with a case of Crown Royal in the back of his Impala. And he'd show up to a rig in an Impala and he'd give the pusher a big old bottle of Crown, and that just doesn't fly anymore, right? So the
whoa, that's frowned upon. I didn't know that was frowned upon. We're going to cut that out of the podcast. I want plausible deniability. Reed, you have just ruined so many sales guys' day because now they're like, well, Reed said this is frowned upon. We can't do this. You should have said, man, come on, man.
Well, you're wait off location now.
The Texas Oil and Gas Podcast does not endorse or condone anything that Reed Goodman has said, will say, or thinks about saying. Just to be clear, you do you, or don't do you. Follow company policy and law if you think you can get away with it. But whatever. This is a comedy podcast. Keep that in mind, people. Go ahead, Reed. Go ahead. Just get that in there.
So, anyways, I guess what I'm saying is, I don't know. Somebody on LinkedIn likes the hashtag "It's not your daddy's oil field," and I think that certainly, companies will adapt, and there's companies that will refuse to adapt. And the ones that refuse to adapt, they'll continue to do work with maybe some of the ones they're still doing work with, and they might peter out over time, and they might find their niche and just love it, and just stay true to that. But I do agree with you. There's a lot of requirements that are changing, and I don't think that they're in such a manner that they're going to squeeze the small service companies out. Personally, from what we've seen, it's not a barrier to entry that we can't make it happen.
Well, it's a thing.
Not yet.
Right. Well, that's the thing. So if you say the margins are tight, but the insurance requirements are going up, the safety requirements are going up, all these overhead requirements are going up, and the margins stay tight for a prolonged period of time, then you kind of get into this spot to where it just changes the competitive balance, right, wrong, or indifferent. And it's something that the industry is going to have to deal with. One of the things that's been beautiful about the oil and gas industry is that, Reed Goodman could go start 4 companies and go make $1 million, and so we want to keep that kind of mentality. This is your average Joe. $2 million. I'm sorry, Reed was saying it was $2 million. I didn't know. Sorry, Reed. Reed made $2 million. He was saying $2 million.
I was praying for that first million.
I think Reed said he made 2 already. Sorry, Reed. Sorry. Reed made $2 million. But anyone can go start, and it's something to where you can go work for a service company or an EP, learn a part of the trade, whether it's drilling a well or working on wells or pipelines or whatever. You go start a company and go do that. And so I think that's part of the spirit that makes the oil field kind of unique and something that we want to keep. And I just hate to see keeping new, fresh ideas out of the industry because of these these insurances, as I mean, especially talking about professional liability, they're outrageous. They're outrageous.
When you want to talk about new ideas, Ryan, and part of this is a plug for me, but part of this is what's going to keep smaller service companies around, right? Is that companies like Baker Hughes or Halliburton, they buy innovation. They don't create it, right? So we saw a need for a particular tool, particular downhole tool. So we talked about ESPs last time I was on. A lot of people are having to fish their ESPs out. Parted tubing, something stuck. And when it falls down on the curve, it makes it really hard to fish. And so there's been a big push in the last 2 years to develop what's called an ESP catcher. So it's just a tool that you set below your ESP, and if it falls, it keeps it from going down into your lateral where you can't fish it out. So we've been selling a couple of those and having some conversations, and come to find out, nobody makes one that's tubing retrievable, okay? And there are hundreds of tool companies across the U.S., and this is a tool that nobody makes. And so we're small enough and nimble enough and have enough time that we said, look, nobody's making this. Let's design one, right? From 6 months of saying that, we have one ready to go in a well. And so, you're not going to see that at Halliburton, right? You're not going to see that at Baker Hughes. And so when people need innovation, they're going to have to rely on smaller companies to make that solution and prove it up. And, now that we've got going, we've got proved up, I'm sure there's going to be a dozen people copy it in some way, shape, or form. That's just the way the oil field goes, and we're all right with that. But our purpose, and like I said, having those small companies, but our purpose is saying, hey, look, we enjoy getting into the nitty-gritty, and we enjoy providing solutions. And that's why we don't want to be at one of these big, huge service companies, because then we're just doing cookie-cutter stuff, and we get bored, and we don't work our brain, and we don't provide solution to a company because it may not be enough revenue. It may not be a big enough market share for them to even look at. And we got tired of that, right? So I think absolutely there will always be room because of that innovation.
Okay, final question before you read, let you go. What do you call a man who squelches on a bet?
Who what's on a bet?
Squelches, doesn't pay up his bet.
Oh, well, depends on the bet. I guess, and really, if there were clear expectations on a time frame for that bet. See, I've been waiting for Josh to be available so that we can take everybody fishing.
Josh is available to go fishing whenever he'd say we're going fishing. So Josh is ready. Josh is ready. I mean, I'm just saying. So, I'm just curious what you say about a man like that.
We're coming up on almost a year when we made that bet. I guess April 22nd is when oil prices went negative. So we were probably about May 1st, weren't we?
Yeah. Well, just so everyone knows, Reed and I had a friendly bet. I say friendly. No, I mean, the stakes were a 4-person, all expense paid trip to fishing down Baffin or Corpus or wherever, that oil prices would go negative twice. I, of course, as the expert, said they would not. Reed, as the young Padawan learner, went against me, and he lost. However, he hasn't paid up, and so it's just I don't know how you get this man to pay up. So I'm calling him out publicly here. Reed, I need to go fishing, bro.
Ryan wants to go fishing.
And like we were talking about earlier, we have to get cash flow positive first.
That wasn't. Hey, listen. That wasn't any, I don't remember that being a part of the terms of the agreement. You talk about these contracts, these oil and gas companies. We gotta.
You can read the fine print in that text message, Ryan.
Yeah. Well, I got the text message. So, anyways, Reed, where can people find you?
So we have a website, TurpinOilTools.com. I am on LinkedIn. I'm on Facebook. Reed Cajun Sparkle Goodman. I don't know if anybody does that anymore. Or Ryan has my contact info if anybody wants to talk about any kind of completion, production, specialty tools, artificial lift. If you have a need, like I said, we're really into sitting down and taking a look at that. So reach out to Ryan on LinkedIn, or you can visit our website, Tarpon Oil Tools, and all of the contact info there goes to me. So,
yeah, reach out to me. I'd be happy to charge Reed a fee to connect you to. That'd be lovely. I love that idea. Being that he worked on the first bet, I don't know if he'll pay me or not, but I'd be happy to take a commission. So, Reed, I'm just saying the fish are biting. That's what I've heard. They're there. There's plenty of them. Actually, what the rumor is, there's too many that need to be thinned out. So they need some experts like Josh and myself to go kind of thin the herd. And so
that's right. Chase down all those frozen fish.
So, all right, buddy. Well, best of luck to you. It was good catching up, and we'll talk soon.
Good seeing you, Reed.
Thanks for having me on, guys. Bye.
All right, Joshua. Let's see here. Get things. I said squelches. I meant welches. Whatever. I can't speak. Stewart's giving me a hard time. Stu, squanches, squelches, Welch on a bet. That's the thing, right? Welch is on a bet. I don't know. He didn't pay my fishing trip, man. And what kind of man does that? What kind of man does that?
Yeah, well, he may come up. He may come up with the money. Get him cash flow positive. We're gonna hold him to that bet because I need to be one of the 4 that's going on that trip.
Yeah, so if you're listening and you need something that Reed does, call him, hire him, pay him, and tell him, oh, by the way,
I got to be one of the 4 to
take your boys fishing. Yeah.
That's a good idea.
Take your boys fishing. Love you guys. Yeah. Listen, this is the comedy podcast too. We're not talking about what may or may not be happening on the show. So I don't know if the car was moving or not. I will not comment there. So All right, Josh, what else we got before we wrap it up, buddy?
Let me hit a few things real quick before we wrap up. First of
You're
all,
coming on next week, aren't you? Is that next week? Go ahead, Josh.
first of all, thank you to Reed Goodman coming on the show. That was great information. Good to he has feet on the ground, so it's good to hear some of that. Glad to hear that service chops are coming back. Hopefully, that is a long-term phenomena that we see continuing for the rest of the year. A couple of stories. One, Biden plan targets fossil fuel subsidies worth $35 billion. We're going to link this in the show notes. We may cover it again next week, depending. But I thought this was interesting. There's a tax plan for corporate taxes that's going to be coming out, and there are some targets for fossil fuel companies. So might be worth taking a look at there. Oil extends climb with near-term demand concerns easing. So many people in the market, Ryan, they are aware that just slight changes from the Saudis or more shutdowns could devastate the oil market again. And so people have been cautious, but those cautions are starting to ease and people are starting to loosen up a little bit. So we'll see if that caution diminishing is justified or not here in the coming couple months. I think you mentioned OPEC June or July, they might revisit, which they can at any point really, but that'll be the tale of the tape. Let's see. I mentioned the jobs talking with Reed. So it says in February, the oil and gas upstream oil and gas sector added 2,300 jobs in February. So great news there. The upstream part of the industry is adding jobs. So good to see that. And then we have one more, Ryan, and I'll put this one in just for you and Anas. IEA warns developing nations are a blind spot in climate action. I just love that. People are concerned with taking action, on climate, and they're saying that these developing nations, there's a possibility that they may need a lot more fossil fuel than these IEA experts are anticipating. So,
yeah, there's always something. All right, well, that is it for today's show. We will be back again next week. It's good to get Reed on once again. So be sure to check him out. We'll link to his LinkedIn profile in the show notes. Mr. Shelton, and good show. It was good to get Reed on.
Yeah,
he wasn't mean to me this time. That was nice. I mean, I think it's more about him owing me a fishing trip than it is anything else.
Maybe he knew it was episode 200 and it was a good time for celebration, not for too much bagging.
Yeah, well, I mean, he did lose the belt, so obviously, I think he was trying to stay away from that. But maybe he's just a nice guy now. So no, Reed is a nice guy. So it's good to get him on. Reed, take care, buddy, and listeners. Until next week, keep climbing.